All right. Hello, traders. Mark here. My name is Mark P. Markets, Mark Principato, for those of you that don't know me. And welcome to another Greenbridge Investing market analysis. So I'm not simulcasting today, so we could be a little more loose with things. If you don't know how this works, please share your symbol or the market that you'd like me to analyze in the chat now. So once I get through my portion of the analysis, I could spend time on your questions and the charts that you would like to see. I definitely want to spend more time on your questions, okay? So I'm going to try to get through my stuff real quick. Anyway, I want to thank you all for joining me this Thursday afternoon here. I'm located in the New York City area. And for fun, again, if you want to just put where you're from, what country you're located in, I always love to see that stuff. All right, anyway, so let's get started. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. Okay, now let me get my chart up here. Okay, so we're going to start with Bitcoin. Again, so this is the weekly, this is the update from Monday, right? So on Monday, I do like basically the price action forecast for the week. And then Thursday, I like to provide an update so we kind of get a sense of how things played out and what kind of clues we can gather for the next few days or going into the following week. All right, so first thing I want to do here is I want to begin with Bitcoin. Now, okay, so here's a few things that we need to talk about. First of all, I talked about this scenario, right? See this blue box over here on the Bitcoin chart? I talked about that a number of times, and I was looking for a swing trade going into that area. But as you can see, price never actually went into that area. It stopped just above at that 52,924. And then we get the sharp candle yesterday, right? The sharp green candle. And, you know, maybe there was news, whatever hype. I don't know because I don't pay attention to any of that stuff. But here's the thing. Look at the candle now. All right, so now this thing's back to 55.7 area. It's minus, 1,700 points or whatever, and it's kind of giving it back. Now, my point with Bitcoin, and I talked about this with a few of the other coins, is it's not the action you should be going after. It's really the first thing you should be looking at is the level, okay? And I've been talking about this over and over. This area, 57, 58, 59K area, is a random area. Right, so there's no advantage to taking a trade in this area, and the reason why, I just wrote a report that I sent to a website earlier. The reason why this is so unattractive is because if I took this trade on this green candle, okay, because I wait for the candle to close, and this is a very steep green candle. If I wait for that to close and I take the trade basically at 58K, now in order for me to justify my risk, which is basically 5,000 points from this midpoint, okay? I need to risk 5,000 points, and I have to hope that this thing can make it to 63K to justify that risk. That's why I am not interested in taking trades in the middle, not for a swing trade. By the way, let me know if you can hear me or not. You know, I think, see, my volume looks good, so I think people can hear me. So, and Eric, to answer your question real quick, so I stream usually on Mondays, and yeah, I try to set them on a schedule, Mondays and Thursdays. So Mondays, basically at 3 p.m. is when I'm streaming, 3 p.m. Eastern Daylight Time, and Thursdays, same time, that's on YouTube. And I'm simulcasting on Mondays, I'm simulcasting on TradingView. Okay, now Tuesday is Talking Markets. So Talking Markets is different. I have Andrew usually on and Henry on, and we cover things from a different perspective along with technicals. But my streams are purely technical. I'm talking from the swing trade perspective only and the strategy that we employ over at Greenbridge, okay, for our swing trades and stuff like that. All right, cool. So again, if there's any problems with the sound, please let me know. But I think my sound is okay. Cool. All right. So like I was saying, that's the problem with the middle of the range. So again, my point here, what I want you to take away from this is location first, okay? We know the trend, the broader trend is bullish. People ask me, if things are changing here. There's nothing changing here. In fact, since Monday, price hasn't really gone anywhere, right? And we go a few days back, right? Monday we were fooling around 57K, blah, blah, blah. We're in the same area. We've done nothing. Meanwhile, people are getting all excited, about these moves in between. It's noise. It's random. It's nothing. So until we reach a key area, right? And the key areas are maybe 52K, 50K, 48K. Those are the key areas. Those are the locations where I'm interested. But that's all I am, is interested. All right. I don't take any trades until the setup and confirmation develop. Those are very important points that you need to consider, because if you just step in front of a trade and step in front of a market just at a level, the level can break randomly, right? So the idea here is to promote consistency over time, not random outcomes, which is no different than going to a casino and playing a slot machine. As you all know, I don't like to play slot machines. So that's the thing with this, right? And now look, so today's candle is basically so far proving why I've been so hesitant to take trades in this area. Now we have a couple of trades out there on some of these coins. In fact, I almost called Atom yesterday, ATOM, but I didn't like the way it closed, because these sharp candles don't let us into the swing trade. I need to see a smaller candle because the risk is too high with these sharp candles. Day trades are a different story, but I'm not talking about day trades. All right, these are great for day trades. Anyway, my point is, now we're getting this red candle. We have to see how that plays out. But I wouldn't do anything with this here until we either touch 52K or that 50K area. Those are the areas where I'm interested in buying, and that's it. It's that simple. Either Bitcoin aligns with my idea, or I don't have to take any risk. Okay, so that's Bitcoin. Now, here, let me show you Atom real quick, because I was considering this as a swing trade. This is why I didn't call it. All right, so first of all, I was looking at, when I was looking at this thing, it was over here, right? Around that 54. It was trying to push 54. I said, okay, that could be a swing trade. It's aggressive off the high or low, right? That's what I was thinking about. And then it just kept going and going and going. And I'm not going to chase it. Right? And I don't want to get our members caught in these ridiculous situations either, because most of these coins are just ridiculous. There's really no rhyme or reason for a lot of it. It's just froth. And when the music stops, and Andrew said the same thing to our members earlier, when the music stops, this game is going to get ugly. Okay? And I don't want people to have 20 positions on and they all turn red at the same time. Anyway, look at this. So if you had chased into this, right, now you get the bearish pin bar. That is not what you want to see after you take a trade, especially a breakout trade off of a middle area, like the middle of a range. This is exactly what you don't want to see. So what people do is they go into hope mode and they stay in this. No, it'll come back, right? People believe these things will come back because since like November, December, this market has been very kind, or I should say very forgiving for these bad habits, right? Like, people don't think markets pull back. They pull back a little bit, but they always come back. So it's okay to hope, right? That's what it reinforces, but that's not the case at all. That's not reality. When these things break and they break their supports, hope mode is going to rob you of any random profits that you've made and then some. That's usually why people usually don't make money in the long run, because they don't know how to get out of these things. Okay, so this is exactly what you don't want to see. Right? Many coins are looking similar to this. Let's take a look at Litecoin real quick. Look at Litecoin, right? Why I don't like chasing these. Look at this. So you had the breakout. Everyone's excited. Litecoin's going to 10,000 or whatever the gurus on YouTube are saying. And then you get this red candle. Okay, so now, I could be wrong. Maybe it wants to go higher for whatever hype reason is out there. But the thing is, when you get this sign right here, that's not what you want to see after you buy a breakout, right? So that usually the right thing to do is, if you bought the top of that, take the loss. Take the loss because the risk is very high. Another common mistake that I see people making is they're taking day trades, right? Day trade risk, but with swing trade expectations. So they'll take a trade, they say, oh, I'm only risking, a few points, but I'm looking to make 50 points. Right? And then it goes against them, and then they remove the stop, and now you've just opened yourself up to enormous risk. You have to respect the risk. All right, so those are a couple of coins I wanted to talk about. Let me go into the stock market real quick. Now look at this. NASDAQ 100. All right, we've been long calls, as many of you know, because you're in the trade, long SQQQ. Right? Now, I just want to make an example of that. I called that trade back here on this red candle like 3 weeks ago. Since then, it's been a pain to hold on to. But the calls that we purchased were January calls. I bought all of that time. I remember people asking me, why January calls? We don't need that much time. Yes, we do. Because when markets do this kind of nonsense, they waste a lot of time, and the theta decay on those calls is very high. So we need a lot of time to wait for dramatic moves. We need a dramatic move for that position to get somewhere. That position is just about even now, okay? And the market moved significantly. So I'm not worried about any retracements here back up on the long side. I'm looking for 13,200 to trade on the NASDAQ. We have this inside bar that was developed yesterday, right? 13,476 is the low. We took it out today, and it's trying to fool around right now. But this right now, from my perspective, this situation right here is here. Let me just erase some of these boxes to make it clearer. This situation right here is developing into what looks like a momentum continuation pattern. Usually when you have sharp previous, like a range expansion like this, and you get a couple of inside bars or inside range candles, and they take out the low, that's often a momentum continuation. So the momentum here is bearish, not the trend, the momentum. So that can take us to 13.2. The broader trend is bullish, right? We haven't taken out any major supports. It's a counter trend trade. So we'll see how things go when this thing can, if this thing can get to 13.2 or 13 even, okay, or maybe 12.8 or something like that. We'll see over the next few weeks. By the way, tomorrow is NFP, non-farm payrolls, and it is 8:30 a.m. Eastern time. It's the most important scheduled economic event that we see every month. It's usually the first Friday of the month, okay? It's important to know because it affects all markets, not just stocks, not just currencies. It affects everything, right? Because it's basically like a hint toward how the Fed might shape interest rates in the future, depending on how the numbers are interpreted, okay? So again, you don't have to sit there and try to figure out, you don't have to be an economist to figure out, how the Fed is going to interpret non-farm payroll. All you have to look at is how the market prices it in. Recent ones has been pretty much uneventful, but if we get a dramatic move and we break supports, we could see, it's possible to see a range expansion going lower, right? That's possible. So we have to see. It can be a catalyst. That's my point. All right, so that's that real quick. Now let me go over gold, all right? Now check this out. So gold has a nice pop today. It's up 27 points. We've been long gold, as you all know, since February. All right, we've been calling longs for gold since February, March. This swing trade I sent out, like 2 months ago or a month and a half ago at 17.20. We're almost at target 2, right? Target 2 is at 18.30. Today's high is 18.18. Nice. We've also bought inventory. We've collected inventory in stocks like wheat and precious metals, as you know. Okay, this thing's at 43.77 right now. I mean, we had our members buying into this thing when it was pushing below 40. And, people held on, and now it's doing well. That's a position trade. I'm just pointing it out because it's doing well. You don't want to buy these now. This is where you have to be in them, all right? Just like a lot of those altcoins. When they're doing stuff like this is when everyone becomes interested in them because they think that they look good. But no, the risk is high now, all right? Because these things can pull back and this and that. But when you're in from low prices, I mean, my average price on wheat and precious metals is like $40. So that's what I want to see. And it's making the higher high, great. I'm a strong hand. Now this thing can do whatever it wants to do. Once it starts pushing resistance areas, okay, and gold starts getting up into like, the 1900 area, then I'll start unloading, right, and locking in profits at that point with the inventory, at least some profits. Anyway, so I just wanted to point that out. There will be more minor pullbacks in these things. Gold is all over the place. I mean, look at this real quick, right? Gold has been strong, but look at all this time it spends producing these red candles, okay? And then it looks ugly, and you get a bearish pin bar, and then it shakes some people out. Meanwhile, it's going higher. Gold is in a seasonally bullish time, so any more little red candles that show up may offer some kind of opportunity to add, right, to your inventory. And like that would be like mining stocks, Newmont Mining, wheat and precious metals, even something like AG, right? Now look at AG. I called this one a week ago as an alternate to gold. By the way, we called XAU as trade of the week as well, which is, the gold CFD. a week before. Look at this nice solid candle on AG. AG is a silver miner, and a First Majestic Silver they're called. And I called this trade basically off of this triple bottom area or quadruple bottom. This is the kind of candle I want to see here. It never stopped out, right? The low here was 14.84. My stop is at 14. Okay, this thing is now at 16. So great, that's what we want to see. This thing is still a trade, by the way, because the entry is at 16. So you can see how it's been fooling around, because I called this like 4 days ago, all right, or longer than that, like a week ago. And it almost went to the stop, and here we are again. So this trade is still worthwhile if you want to get some exposure to gold and silver. By the way, this is a low float stock, so when it goes, this thing can go quickly. All right. So anyway, just wanted to point that out. All right. So those are the ones I wanted to cover. Now let me see. I want to go over. Let's see what people have, what they're asking me here, because I'm sure I have plenty of charts to go over. So let's see. Let's get to the questions. If you have any questions also about any of these trade ideas that I've talked about or any other market, just please ask in the chat. All right. So hey Wedge, good to see you. Gabriel. All right, cool. So can we have a look at flow? Oh, by the way, someone had asked before I get into this. Someone had asked about INJU USDT. Is that right? Is that the right one? Oh no, it's INJ USDT. All right, someone had asked about this, and I forgot to cover it. So let me just do that real quick. All right, look, and this looks like the Bitcoin hype situation. Let me just check something out. Okay, NEO, that's NEO. So you had this attempted breakout, right? Again, gets everyone excited. Then you have this situation right here. This is just noise. I mean, how much is this thing? $17. That's noise. There's no significant level here. Your first support on something like this is around 1570, right? That's your first support. So, and you're getting that red inside bar today. If we take out this low tomorrow, right, the low, which is 1750, it looks like, then you're likely to start testing this 15 quarter area or 15 half area here. That's a much more attractive place to be looking for swing trades if that's what you're looking for. Okay, upon a confirmation, a setup and confirmation. Otherwise, I wouldn't mess with this thing right here. Most of these altcoins, by the way, they look the same. And that really bothers me because they're all the same trade. So it's like, you take one or two and that's it. If you take all of them because you think they're different coins or do you think whatever, it's a gamble. And most likely when one of the leaders pulls back, like Ethereum or Bitcoin or whatever, they're all going to be red. And when they're all red, usually what that will lead to is an emotional reaction when you open your account and you see everything is red, and you're going to be overwhelmed and likely start banging things out at random prices for no reason, right? A lot of times. So that's why you want to avoid that situation. You don't want to be at the mercy of the market. I say that a lot. Okay, so that's INJU. I wouldn't touch this thing right here. All right, most of these altcoins, by the way, are garbage. So it's something to keep in mind. People seem to have this idea, maybe because it's all the hype out there, I don't know. But people seem to have this idea that these are like stocks, right? Quality stocks. Most of these coins, most of them, they don't give you any kind of financial statements. They don't give you any kind of financial reports. All you have is, like a white paper, and then maybe their developers give you some milestones that they're going to do, and they solve this problem, and now they aligned with that, and they partnered with this guy, and they're marketing over here. Okay, great. That's nice. But, how do you measure the value of these things, right? These are very similar to the dot-coms of 20 years ago. And I know a lot of people say that. I know a lot of people don't want to hear it. But a lot of these coins are going to go nowhere, right, over the long run. Some will, but the majority of them won't, just like the dot-coms. There are many, many dot-com names that you don't remember or never heard of because they're no longer on the market. Okay, but 20 years ago, they were like the next big thing. So just something to keep in mind with these. Don't ever forget that. These things are not investment grade. They're high risk. So you have to, if you're looking as an investment, you should really consider that as far as an aggressive part of your portfolio, meaning it's a small part of your portfolio. Not 20%, not 50%, not 80%. It's like 5 to 10%. That's aggressive. Okay, so if it doesn't work out, a small portion of your portfolio, underperforms or you lose money, whatever. All right, anyway, so I just wanted to put that in there. I always have to remind people of that. Okay, cool. So let's talk about some of these things here. So flow, let's get into that. Flow, USDT, what's the story? Okay, so look, similar situation. Now, bigger picture, let's take a look here. We have this broader bullish trend, right? We can all argue that's a broader bullish trend. Again, all part of the February and March hype machine. And since then, we've had this range, right? Consolidation. Okay, fine. So usually when you get a consolidation within a broader bullish trend, that's typically a trend continuation pattern. But this location is unattractive. On top of that, the current candlestick situation is also unattractive. So not a good one for a long idea right now. For a long, I would be interested in this level here, which is 24.70. 24.70 to the $25 area, or maybe even slightly lower if it wants to maybe test slightly lower, right? And you get your reversal there. That would be basically a failed low, and that would also be like a triple bottom, relative to these two lows. That would be your high probability location. Now, one thing I want to point out, since I just remembered this, I wanted to mention, people seem to think that all trades are created equal, but that's not the case at all. There are high probability trades, which are rare and infrequent, and then there are low probability trades, which are everywhere. Okay, there are lots of them, but so people, it's human nature to think that more is better. So people think more action, more trades, more opportunities to make money, but that's not the case at all. It's more risk, and more risk is not good usually. Okay, so in order to promote consistency, you need to identify high probability and then wait for them. They're very hard to wait for, especially if you're very action oriented, but they're rare for a reason. It's because they're high probability, they're high quality. And this would be such an area, right? It begins with a location. So that $25 area, all right, or maybe mid to high 24s is that high probability, high quality location where buyers are likely to step in. You don't have to take a lot of risk, and the chances of it testing the middle of its range from that low are much better than it going all the way back to the high and breaking out. Okay, although the broader structure favors such a scenario, it's still a lower probability. Okay, I like to get into something, and I like it to have an easy time getting to its exit. I don't like when they waste a lot of time and fool around, because it invites a lot of second guessing and a lot of anxiety, and who needs that, right? So that's flow anyway. Okay, so thanks for bringing that one up. Let's see what else we got here. Hey, Eric, let's see. How often? Okay, so I answered that. Cool. Thanks, Gabriel. Thanks for the answer. All right, Bruno, a few questions. Where can I get your book? You talked about, okay, hold on a second. Bruno asks, can you take a look at EOS, USD, and NEO? Sure. Okay, so the book that we were talking about, my ebook, there's a link actually to it. If you click on the show more, there's a link to it here in the description portion of this video. And I just want to point something out. Thanks for asking about my ebook. The objective of that book, I wrote that to give people a starting point. Okay, so I know everyone wants a strategy and everyone wants like the answer to everything, but that's not what is in that book. What I wrote in that ebook are basically all the techniques that I use, and I still use them, to forecast markets effectively. All right, now there's lots of junk out there, and a lot of it doesn't work. All right, so I've spent many years wasting my time on things that don't work. So over the years, I found things that actually provide real forecasting value. That is what is in the book. Now, these things you can, find on your own. You don't need my ebook to learn about Elliott Wave, but I point out Elliott Wave in my ebook. I point out some other, chart patterns and candlestick patterns and things like that, because when you put them together, they actually provide value in terms of anticipating a market, right? That's the whole idea behind the forecasting. It's not a trade strategy. So I just wanted to point that out. And from there, the ebook encourages you to now pursue these particular topics on your own and learn about them further. I am working on something, to provide more of an educational solution. But you know, it's taken me a very long time because I'm the only one working on it, and you know, I have to make sure that it's done right and this and that. So when I have something like that, I'll make sure everyone knows about it. But right now, I don't have anything else besides the ebook. Okay, so thank you for asking about that. All right, so let's take a look at EOS USD. EOS USD. Oh yeah, okay. So on Bitfinex, this is what I mean about froth. What's the high here? 12.55, right? That's today's high, 12.55. And this thing was just at, so this thing basically doubled like in 2 days. All right, so this is what I mean about froth. And something like this, right, this is going to get all the YouTubers excited and everyone's going to say, you know, buy EOS because you're going to be a millionaire tomorrow and all that kind of nonsense. Please, I hope by now all of you know that that's nonsense. I hope that you know that it's nonsense. Now, when you see vertical like this, the first thing I tell people is stay away from it, because if you're not in from a great price, if you're not in from, you know, these areas here, then all you're doing is letting people out who bought at those areas, and you're taking the risk off their hands. You don't want to be that person, right? So all you can do right now on something like this is a beautiful move, by the way, right? And these moves come out of nowhere. Beautiful move. You have to wait for a support if you want to get involved in something like this. So where is the support? Well, your first one is going to be around here, $8.82. You could round that to about $8.50, right around that area, right? That's going to be your first support. It's an old resistance area, and it's likely to find buyers if it retests that support. You know, is this thing going to run to $20? I'm sure you can find some fake guru on YouTube or somewhere that'll tell you, yeah, it'll run to $20 by next week. You better buy it now. I'm sure you'll find someone that will tell you that. But the thing is, when they go vertical like this, this is the herd mentality, chasing news or chasing whatever nonsense that they're chasing. There's no way to know how far EOS will go. But so that's my point with this. Wait for support if you want to get involved. This is a good one for the watch list. Now, I'm surprised to see this. I mean, for the longest time, this thing was pretty much junk, right? And now it goes vertical. So again, that's most likely news. If you're in it, now, if you're in it, hopefully you've locked something in. And in these situations, I like to point out, if you're in it, this is when it makes sense to go to a smaller time frame, you know, like a 240 chart. I mean, look at this. All this move just occurred right in just over the previous day or two. You can trail something like this by just going 2 candles back, all right, on the 4-hour chart, which puts, you know, you look at the low, two candles back, it's 920, basically the 930 or 9.25 area, and that would be a good place to trail your stop. If momentum continues, which it looks like it's not, but if it continues, then, you know, it allows you to ride the move further, and at some point it will pull back and stop you out as you continue to trail. You will not get the high or anywhere near the high by trailing a stop like that, okay? If you want to try to top tick this thing, the only way to do something like that is by putting orders out in advance, you know, limit orders out there. And usually you want to do that at, like, around whole numbers. You know, like if you put one at, like, you know, 12, obviously, what's today's high? 12.55. If you had put one at 12, because it's a whole number, you would have come close to top ticking it. That's the only chance you have at top ticking something like that. And again, it's like a random reward if it just so happens to turn near where you put that limit order. Okay, so anyway, nice. Thanks for pointing that one out. Good one for the radar. Good one for you know, to keep an eye on. NEO. Now NEO, look, this is, again, look at this. So something like this. This is a risky area because it's a potential double top area, right? So number one, I wouldn't go near this thing at these levels. Number two, you have a bearish pin bar developing, like we're seeing in some of the other coins. Bearish pin bar. The candle is green, but you have a long tail on the top of the candle. That's bearish, all right? Now, if it takes out the low of 110 tomorrow, right after it closes, and then tomorrow it takes out that low, then you have a sell signal off of an area where a sell signal is likely to develop, right? So I wouldn't go near this thing long. If you're long, hopefully if you locked in profits at this point, you know, wait for, you know, if you have some shares or some coins, wait for the sell signal to sell some more, right? Lock in some more profit if you have it from a great price. Otherwise, you know, you run the risk of this thing pulling back. You have a minor support at here. What is that? 95 is a minor support. And then you have your recent support that carries more weight around 74. okay, that would be really the much more ideal place to be buying this thing. So I would hold off for that if you're looking to buy NEO. But again, I have very little faith in these coins. All right, there's just a lot of froth and a lot of hype. And when Ethereum and Bitcoin, when they pull back, when they really pull back, these coins are going to break their supports. So is it a bad idea? Like, what if NEO pulls back to this area, just like we had back here, right? What if it pulls back over the next couple of weeks? Is it, should you just avoid it? Well, no. You want to take the chance. If you're going to take a chance, this would be the place to do it, okay? Not up here. So that's the thing. I mean, these things are strong, and if people are willing to continue to buy these things, okay, right? That's what you're looking for. Maybe this thing goes back into a range. At least if you buy near the range low. If NEO gives you that opportunity, at least you don't need it to go back to the high in order to make money, right? All you need is a test of the middle of the range, which is very likely off of a range low, right? That's a high probability type of trade. So that's if you're going to take a chance, that's a chance worth taking. Okay, so thanks for asking about those two in my ebook. All right, so let me see what else we got here. Hey, XX Dan from Romania, nice. Oh yeah, I love when people tell me what countries they're from. It's just amazing how, as a community, people from all over the world, we can get together and spot opportunities. And the reach on TradingView is also very impressive. It's just like some of these countries, like wow, TradingView really has a far reach. I never realized. Okay, anyway, I'm still waiting for Bitcoin to get in. Meanwhile, please also have a look at ADA. All right, let's take a look. So, yeah, because I talked about Bitcoin earlier, let's take a look at ADA. All right, so here's the breakout on this thing. People have been waiting out for this breakout for a while, right? I mean, ADA, everyone's talking about Cardano, blah, blah, blah. Too much hype in this thing. Now, here's the situation. And this is very similar to like Link, right? Link and Atom and all those. And like I said, I was interested in taking the Atom swing trade, which was based on exactly the same setup, okay? The higher low in the middle of the range, but I didn't like the length of this candle because it took away all my potential reward for the amount of risk that I have to take, right? So I focus on risk. I don't care about rewards because rewards come from, they're a byproduct of risk, of good risk management. So I only care about the risk. If the risk is too high, I'm not interested. I don't care about the reward, all right? Because I know that if I'm wrong on a high risk trade and I get stuck in that thing, I give back, all those little random profits. And, like I said, I don't like playing the slot machines at a casino. So here's the situation with ADA. If you took this breakout, all right, and you're seeing this candle now, that is a bearish pin bar. Now, it hasn't closed yet, and usually the range, the open to the close, is usually more narrow than this, and this could change still, meaning, it may close higher and erase that pin bar, part of the pin bar, which would be fine because you're looking for follow through on the breakout. But with all the other coins, we just looked at Atom, we looked at a bunch of other ones where they're showing that same failed breakout. If this thing closes like this and you take out the low, $1.42, okay, if you take out that low tomorrow, that becomes a sell signal and a failed breakout. So you don't want to be stuck in that. That's where I always encourage people, if you're in that situation, take the smallest loss you can, right? Don't be afraid of a small loss. They're the best type of loss you can take. Don't go into hope mode and think like, oh yeah, it'll come back. They always come back. They might, but there'll be that one time when they don't come back. And anything that you make in these little random moves, you're going to give it back. All right, I'm telling you from experience. So that's what I'm saying about this. I don't like these breakouts. I wouldn't go near this thing at these levels. Highly vulnerable level, possible failed breakout going on there. So as far as buying Cardano, where would I be interested? I'd love to see a retest of this low here, this minor higher low at $1.25. And again, that's minor, so that would still be an aggressive trade. The ideal place would be around here, $1, right? Very similar to like when we looked at NEO there, and we looked at those range lows on NEO. That's your high probability area, $1, right? So if it can get there and you want to take a chance, at least for a swing trade on something like Cardano, that's the place to do it. If it breaks that dollar, then you may see like the 90 cent and 85 cent area pretty quickly, and those might be better places for putting on some inventory, but carefully sized, because if these things start breaking, since they all follow each other, right, and these things start breaking, that means probably one of the leaders is breaking, and if that's the case, you want to hold off until stability develops, okay? So thanks for asking about Cardano. All right, Gabriel, can we look at the weekly Bitcoin chart? What about that? Okay, let's take a look. So Bitcoin, and he wants to see a weekly chart. Let's take a look. So let's open up this chart a bit so we can see what we're looking at here. All right, so as far as a doji goes, yeah, that's a doji, right? Today's Thursday, but Bitcoin, what, the week closes, what, on Saturday? Does it close on Friday? The new week begins, what, on Sunday? So we still have a few days, right? Bitcoin's different from the stocks. So as far as a doji there, it doesn't really mean anything, right? It's an indecisive candle in the middle of a range, right? Which is a highly random location. So this doesn't really mean anything. All right, it can still go either way here, so I wouldn't really put any weight on that or be confused by that. I would stick to the daily chart because at least you could see some more detail in there, right? When it comes to the weekly, you really want to see a decisive candle at an important location. So, like for example, if we were at like 48K and we got like a bullish pin bar or a bullish inside bar on the weekly, and then it takes out that weekly high, that would be significant. Okay, that would mean a broader move is likely going to develop off of such a low. All right, so thanks for asking about that. Abraham, look now at BTC. Okay, I covered Bitcoin. So for those of you that may have missed it, if you just rewind the video, go back to the beginning of the video, I went over Bitcoin first. Okay, okay, now he's saying it got, a dump. Now, you're talking about an hourly time frame. That doesn't mean anything, all right? It doesn't mean anything. I'm looking at the daily chart because I'm looking for swing trades. And like I said, this location is highly random. So anything can happen here. It may pull back. It may go back up. It's meaningless. It's noise. So my interest begins with a level. And my first level of interest is 52K. And then we're looking at 50K. That's it. And if Bitcoin is not at those levels, I have no interest. All right. So because again, that's all relative to risk. So he wants to know why. So I think I pretty much explained it there. It doesn't matter. Here's another thing. Why? Why is Bitcoin behaving like this? It really doesn't matter. All right. We don't need to beat ourselves up trying to figure out why. There could be some hype out there, some news, some nonsense. It's all meaningless. What matters is the probability around the location, right? What is likely to happen around this location? And here, anything can happen. It's 50-50. That's why I've been writing articles about there's no advantage to taking trades here, right? The advantage comes around the lows. Why? Why is it advantageous to buy nearer the low? Because other buyers are thinking the same thing and they've proven themselves. They've stepped in a number of times. So that's where I want to buy. I don't care why. All I want to know is other buyers, right? Again, this game is about order flow, but order flow is not something that we can see on these charts, right? What we see here is the result of order flow. Now, some may argue that you can see order flow like on the Bitcoin, on the Coinbase Pro exchange and this and that, but that's not real order flow. That's just the tip of it, right? Real order flow is seeing the actual accounts, right? How much money is in the account, where their orders are in the market, how much size they really have, right? The only person that can see that is the exchange, right? Like Coinbase. They're not going to share that information. But that's very valuable information because you can see when a real large player is trying to sell something, and you can see if they're absorbing the buying that's coming in. We have to guess, all right, where that's taking place. So that's very important to understand. Why, there's a million reasons why markets move the way they move, but we can sum it up to sentiment, right? Perception of the future, players buy and sell for whatever reason. And I'm not really interested in why. I just want to know where they're likely to change, right? Where they're likely to change their sentiment, or, a larger majority of other, like buyers, for example, step in around 50K. Okay, great. They like the level. It's an attractive level for longs. I want to see evidence that other buyers are stepping in. I can see that through the price action on the candles, all right, without actually having to see the order flow. So, but understanding the concept of order flow is very important because it's all about the orders. That's what drives price. That's what determines value. Nothing else, especially on the short term. All right. Ethereum. Nita wants to see Ethereum. Sure. All right, I was going to cover that earlier, but I figured, you know what, someone's going to ask me about it. So let's go to Ethereum. Let's get the, here's my Ethereum chart. All right, so Ethereum, again, these, when they go vertical, this is just, to me, like when I see this, this is just euphoria, right? It's just nonsense. If you're in it, excellent. If you're not in it, now Andrew made a call. He likes to take these breakout trades, and he made a nice call in this thing, but not my style. I stay away from these type of trades, okay? Now, you may say, well, why would you stay away? I mean, look how great, look how well it performed. Well, right, we see one that performed well, but for all the breakouts that I see perform well, I see lots of fake outs, and I just don't like fake outs, especially since it requires my attention, right? And I have a million things to do to begin with. I can't be babysitting markets. So here's the thing. This situation right now, it's starting to hesitate a bit, right? 3610 it made it to is the high, which is a new high, and it's starting to hesitate. Now, here's one thing that stands out for me on something like Ethereum. All right, look at this pattern right here. We have a red candle, followed by a green candle, followed by this hesitation. That's usually, that first red candle is usually a sign that someone is unloading something. All right, that's usually a sign because it doesn't all occur at one time, right? So then whatever, some more buyers come in, but all they're doing is taking it off that person's hands. Like it could be one person, it could be a lot of people, whatever it is. Now the selling is still there, right? Because I don't see a vertical candle going. I don't see this thing continuing to go. So this candle can still change, right? This red candle. But when I see this situation where, you know, the highs are starting to basically accumulate around each other, right? The highs of these candles, that's vulnerability to me. So I'm looking for the lows to get taken out, right? This thing takes out 3150 area, then you have your sell signal. So I'm guessing in that situation, we're going to see a lot of these garbage altcoins that are all trying to push and break out. That's probably where you're going to see all those failed breakouts and stuff like that. So with something like Ethereum, because again, this hype machine, whatever's driving this, okay, whatever fundamental reason, at some point it's going to dry up because it's just part of a cycle like everything else, and it's going to pull back like everything else, okay? There's nothing that's immune to pullbacks. So where can it pull back to? Your first support is basically 2650, right? 2650, 2500 area, that is your first support. All right, this little area here, like that pointed out, that, what is this, 3200 area, 3150, whatever, this is a minor support, okay? It has not spent, there's not much time here, right? Hasn't spent much time there. So it can probably clear that support very quickly. So 2500 is the support, all right? That's the more significant one. If I was gonna do anything with this, as far as a swing trade goes, that's the level I'm waiting for. Otherwise, I'm not interested. I don't care where it goes. In order for me to become interested at a higher level, I need to see structure, right? And this is not structure. This is still part of the vertical move. So that's what I think of Ethereum. You know, am I bearish on Ethereum? Well, no, I'm not bearish, but I just don't buy highs. So I want to see a pullback. I want to see a higher probability location. I don't like when these things sit around their highs and, you know, and then all the hype is going around these things, and you go on YouTube and everyone's saying, you know, Ethereum's going to 10,000 and 5,000, all that nonsense, not interested. Okay, so risk is high. That's all I can really say about that. Wait for the pullback. All right, now wait, someone had asked about, you know, I think I skipped them. Did I skip them? Okay, no, I saw someone, I think it was Shubham was asking about gold. Okay, there's a question. Sorry, I wanted to make sure I answered that one. All right, so let me see here. Okay, Gabriel, for Bitcoin, would you say we're in a kind of Elliott wave 4? Even though, okay, that's a good question. How long okay, so about wave 4, all right, let's go to Bitcoin, back to Bitcoin, question about Elliott wave. Now, you can call this probably this is really not a wave 4 just yet. Let's look at the bigger picture, all right, because when it comes to Elliott wave, it really, you have to know where you are on the bigger picture. Now, this move from the March low, okay, March of 2020, started back here, right, when everyone thought Bitcoin was going to 1,500. That entire move all the way up to 65K, that was a broad wave 3, okay? So now we're anticipating a broad wave 4. Once the 5 waves are complete, and they have completed, we can count 5 waves going up to 65,000. You know, if there's one more leg higher, then that may be the 5th wave. You know, it's sometimes these waves extend, so you can't hold Elliott wave, like you can't think of it in absolutes. But at this point, we can count 5 waves. And if that's the case, then this push right here could be the initial wave 1 of some type of corrective wave. That corrective wave could be a broad wave 4. All right, so when I'm talking about a broad wave 4, a wave 4 could be like a zigzag pattern. It could be 3 legs. It could also be a compound, very confusing pattern that can go on for a very long time. The lows of such a pattern would be around 40K. I'm going to bring up an example, right? And this goes into gold, which I'm going to talk about next anyway. Now, I'm going to show you an example of a broad wave 4. See gold? All right, see the peak over here? That's August, okay? That's August of 2020, all the way up there, right? And you see this low over here? That low was made, what, back in April? What is this? What is this low here? I'm sorry, March. March going into April. So this thing went from basically 2,000 back to 1675, which no one saw that coming. And it took 6 months, right? From August or whatever, just over 6 months for that. That's a broad wave 4. And it sucked. All right, now we're possibly in the broad wave 5. But broad wave 4, if I zoom out, I mean, look at the bigger picture on gold, right? Zooming out, like, oh yeah, right, that was easy to see. Not while we were in it. All right, you know, let me get that text out of the way. So you see that type of corrective move? That's a compound correction. That's a couple of correction or corrective patterns together. So Bitcoin can easily do something like that, you know, and it could take 6 months, so or longer. So something to keep in mind there. That's what a wave 4 really looks like. Bitcoin could be in the very beginnings of that. All right, so I hope that answers your question there. Whenever it comes to Elliott wave, it's a good idea to really zoom out and look at your waves on the bigger picture. Don't get caught up on these small time frame structures because a lot of times they're random, okay? Let's see. Yeah, Dogecoin. No, yeah. Shubham. Okay, gold is rallying, Shubham says. How far will it go? Okay, so Shubham, going into the gold thing, right? How far will it go? I mean, this is just, to me, in my opinion, like I said, this could be wave 1 of a broader 5. If this is 1 of a 5, we have 1, 2, 3, 4, so 5, right? I can count 5 subwaves in that. That could be a broad wave 1 of 5. So that means maybe we get some kind of pullback, right? We don't overlap the initial wave 1. We get some kind of pullback, right, for a wave 2. If we get the wave 3, right, the broad wave 3 of the 5, that should take us back to the August peak, all right, which is 2075. And that type of move can take 3 months to play out, something like that, or longer. Like I said, gold is going into a seasonal high demand time. It's just a fundamental thing about gold. So over the next few months, gold could be working its way after some sort of pullback, right? A wave 2 pullback, which I wouldn't expect a dramatic one. The wave 3, which is never the shortest wave, can take us up into at least close to 2,000, if not taking us above that previous high. Because wave 5 should take out the previous wave 3's high, which is 2075 or whatever that high is over there in August. Okay, so that's one reasonable proportional, you know, target for gold over the next 3 to 6 months. Otherwise, what's more reasonable is the middle of the range, which it's almost there now. You know, high 18s, maybe 1900 area. Okay, so good place to consider. If it starts pushing there and you have some profit, you want to lock a little in, it never hurts to take something off the table, even if it's a small portion of it, while the market's nicely in your favor. Okay, so thanks for asking about that. Elliott wave is good for forecasting, especially bigger picture. Elliott wave, along with like doing like projections and stuff like that, price projections, can help you at least get a sense of targets based on previous price structure. It's all proportional. That's the whole point of it. So you don't come up with some, like, you'll have people coming up right now, gold, saying, oh, gold's going to be at 5,000 by, in a few weeks. They come up with this nonsense, and I don't know where they come up with that. I think they're doing it for attention. But proportionally, the numbers that I just gave you are within proportion. Okay, so let's see what else we have here. How do you identify the support? All right, well, so support really, when you look at these different things, right, like let's take a look at Bitcoin as far as support goes. Support, there's a number of types, right? You have historical support, which I highlight on my charts with these lines. These blue lines that you see are historical support levels. That means at some point they were either a resistance or a previous support. And there's a likelihood that price will reverse there or bounce there again, especially when the market goes into a consolidation. Those levels become very valuable, all right? So that's one type of support. You also have like proportional supports, which you could use fibs for and stuff like that. You have whole number supports, which are purely psychological, but you have to watch for the price action around those levels. But you don't have to get all complicated. Just use the historical ones. I mean, they're pretty reliable. You just have to use them in the right context. So good answer, a good question. Okay, let me just go through here. Wedge. Oh, whether you order, make sure you sign up for the account on Blurb. Oh, do not check out as a guest. Oh, interesting. That's good to know, Wedge. I didn't even know that. Right. So if let me see here. Yeah. Okay. All right. So Wedge put a thing here about the ebook. So don't check out as a guest, he's saying, if you buy the ebook, because it'll screw up the link or something. That's good to know. No, I haven't received any complaints about that. So thank you. Paul. All right. XSN. Let's take a look. XSN USD. All right. StakeNet. Oh, people have asked about this before. Perhaps it was you, Paul, asking about StakeNet. I remember seeing this chart. And here's the thing. So StakeNet, you're still in the middle of this range. Okay. This thing doesn't have the nice trending structures as some of the other coins we looked at. We have this attempt at a trending structure, right? But then it gave it back over here, right? So it kind of ruined the whole thing. When we look at some of these other coins like Atom and Neo and all these other whatever, they just have that bullish uptrend since like November. But this obviously came out, after all that. Anyway, so you're in a range, you're in the middle of the range, and you have this large bearish candle. Definitely not a good sign if you're long, all right? Also, you can see why I don't like getting involved in the middle of a range. And you had the double bottom, okay? You had that attempt. So if you had taken that trade based on, the green candle that came off that double bottom, which is a valid setup, okay? It's worth a try, especially since it's a failed low area, and then you get this type of candle right after, then usually that means you should take the loss, because this right here is not a sign of momentum continuation. When you get a green candle off of a double bottom, okay, the next candle should look like this, right? That's a follow through of momentum. That's what you should see, not this red candle right here. So that's a warning. And so if you haven't taken your loss yet, or if you haven't gotten stopped out yet, maybe you can reduce your position or whatever, or whatever. But my point is, this is not one worth holding on to until it shows another form of stability, meaning it tries to take out this low at 37 cents and then gives you another reversal, okay? I wouldn't hope for that, but you wait to see if the market will prove it, all right? It tries to go lower, gives you a pin bar over here or something, then it's worth giving it another try after the market shows its hand. Don't go into it thinking, oh, well, I hope it does, because hope doesn't pay the bills, as someone once told me. All right, anyway, so that's a good question on XSN. Oh, hey, travel. Oh, from Italy. Nice. Always nice to hear from Italy. We have a few people from Italy. Michelle's from Italy. All right, Abraham. Okay, cool. No problem. Caleb asks for RFP. RFP. Let's take a look. All right. Let's see. Let's look at the bigger picture here. Now, look at this chart. This chart is clearly a bullish chart. Much different than StakeNet, right? I mean, I know it's not a coin, but the point is, this is a bullish trend. There's no question. StakeNet is range bound. I hope you can see the difference. Now, that's our bigger picture. So that means something, right? Now, more recently, we have a range low right there. It touched that low at 13.98. So basically 14, right? It touched this area here and bounced. The support after that would be here, okay, which is an old resistance. So that is around 10 and a half, or yeah, about 10 and a half. That's your next support, okay, if that 14 breaks. So you can measure risk from those levels and all that. Now, as far as the price action right now, you're in the middle of this range. I don't like that, all right? Yes, you have a bullish pin bar, but the location is far from ideal. Because here's the thing. If you look to take something like this, you have to ask, what are the chances that it's going to go and test this high, all right, 1714, which, you know what, it's not completely unreasonable. You are in a bullish trend. And higher lows often lead to higher highs in a bullish trend. Okay, so you have that going for you. But how much do you have to risk to take that chance? Well, right now this thing's at $14.81, almost $15. So let's say you buy it at $15, right? How much do you have to risk? Well, if you say, well, I'll risk the bottom of the pin bar, $14.32, that's too tight. All right, you'll easily get stopped out there. The support, that's not where the support is, right? The support is here at 13, like I said, whatever before, right? 13.98. Oh, I'm sorry, the low here is 13. The low over here is 12.93. So you're looking at 13, right? That's your low where you're measuring risk from. So if you buy this at 15, you're risking $2 basically, all right? And in order to justify that risk, you need to make $2. So if this thing pushes, what does this say, 17.14, that just barely makes it, right? This thing needs to go up here to justify your risk. It's 1-to-1. All right, that's, you know, if you're into that, okay, it's not horrible. But the thing is, you know, you have to fight all this and you have to hope that it tests that high and this and that. I'd rather buy it at the double bottom, okay? Probability is just a lot better, and the chances of it testing the middle of the range are much better than it running all the way to the high, although the trend is on your side. So that's, you know, more of a, that's when it becomes more of like a personal preference. If you can, as long as you can justify that reward risk, right? If you take $2 of risk and the nearest target is like $1.50 away, no, it's just not worth taking. Okay, that's where reward risk comes in to be very helpful. Hey, there's Michelle. Speaking of Italy, all right, 20 people watching. Thanks. Excuse me. Thanks, Wedge. Yeah, I don't get a lot of people listening. I don't get a large. You know, I don't get like 100 or 200 or 300 or 1,500 people on the live streams. You know, it's because I speak the reality, and I know people don't want to hear reality. But I've also done some research, and I understand why people get those big numbers anyway. I'm working on it. It's going to take me a while to get all that going, but I'll get there. I'm not worried about it. Thanks, though. Thanks, Wedge. I appreciate that. Okay, cool. So, any other questions? How am I doing with time? Okay, not too bad. I'm pretty much on schedule. You see, this is how I'd like to conduct my TradingView when I'm simulcasting on TradingView. But you know, I have so many questions usually. I'm overwhelmed with questions, and I could never, you know, I'm usually into it like an hour and a half, and I still haven't answered like 50% of the questions. So anyway, here's a good time to answer some questions, and I can ask and I can answer them. So anyone have any other questions about any market? Let me know. A couple of things you should keep an eye on. US 10, all right? Keep an eye on this. US 10 is the 10-year note. This is basically a gauge for interest rates, and when the price goes higher, yields are going lower, which is inflationary, and price goes lower, yields are going higher, which is anti-inflation. Okay, so just a couple of things to keep in mind. Treasury Secretary Yellen the other day said that they hinted about raising interest rates. Right, so that's what knocked the wind out of the market. Keep an eye on those little hints, all right? Because that stuff comes out of nowhere. Anyway, the market will not like higher interest rates. Michelle wants to know about Link and VET. Okay, let's take a look, Michelle. Link USD. Okay, so this is one of those, again, this is one of those froth coins, right? It went nuts. Maybe some people chased it, whatever. My point with this, and again, we looked at another one that looks similar to this. If you bought the breakout and this is the candle you see after the breakout, that's not what you want to see, right? You don't want to see a red inside bar developing. Now, we still have some hours before this thing closes, but if this thing closes with the red inside bar and you take out the red inside bar low of 45.34, you take that out tomorrow, that is a sell signal and potentially a failed high, right, in a vulnerable area. So this is really most important for people that just took the trade. Like if you took the breakout and you're looking for this thing to follow through, this is not follow through. That's where you need to be nimble and make the adjustment, right? And that could mean a small win, that could mean a small loss. The mistake you want to avoid, and I said it earlier, the mistake you want to avoid is staying in this thing and hoping that it continues higher, because the supports, I mean, one support is 44, right, the old high. That's one support. If that's cleared, you know, you're looking at the middle of the range, which is 38 area. And then if that's cleared, you're looking at the low of the range, which is around 35. That's a lot of risk, especially if you took on a sizable position in something that's, you know, not so as expensive as some of the other ones, right? So that's what you're looking at in terms of risk. The main thing is this red candle, right? So you have to babysit that. So thank you for asking about Link. Let's take VeChain, VET, USD. All right, now, so with all this froth going on in the world, VeChain is not performing, right? So this has a similar setup to what some of these other ones looked like before their move. Like Atom, Link looked similar to this, where you get the higher low right there. You have that nice sharp green candle, okay, off the higher low. I would think that the next candle, like this candle we're looking at right here, would be a little more enthusiastic than it is right now. All right, as far as follow through goes, what you should be seeing here is a vertical candle breaking out like that, you know, like Link or, you know, some of these other ones. Why aren't we getting that here? So that's a concern, right? You're still stuck at this range resistance. If this candle turns red, that would call for an adjustment, in my opinion. Again, if you're talking about a swing trade, if you take out the low of 18 cents, that's something that it should not do if it's going to maintain this higher low. So that would really call for taking your loss, or, you know, just getting out for whatever you can, because if this thing starts breaking supports, you know, you may see some unexpected lower numbers, right? I mean, you may see something like your next support after that is like 9 cents. And now somebody, how can it go? It won't go back to 9 cents. These things never pull back, but that's where the support is, right? That's where it is. So it's anything is possible. You have to keep that in mind with these things. All right, so that's what the chart is saying right now. If you don't get the follow through, you need to make an adjustment, right? And this is right here, that candle is not exactly the kind of candle I would call follow through. All right, so just keep an eye on that one. Thank you for asking about VET and Link. Let's see what else we got here. Let me see. So without likes, you won't get exposure to. Oh, is that what it is? Wedge? Okay. Yeah, I don't have a lot of likes here. But don't worry, I know. You know, it's not just YouTube. There's other communities and stuff. And, you know, so I'm working on it. I appreciate you looking out for me, though. Travel, can we talk a little about exchanges? I understand you trade on Coinbase. Do you use any other one? Okay, good question, Travel. Coinbase, yeah, that's the one that I use, Coinbase, just because, you know, pretty much as a U.S. Retail investor, I really can't use, I mean, this is Binance US, but I'll tell you, I don't like Binance. The platform is like a slot machine. There's so much unnecessary information flickering all over the place. It's just a mess. It's like, I can't even, before they switched over, before they threw out their US customers and you had to go to Binance US or whatever, I couldn't find, like, I'm like, okay, I'm in this coin and I need to see my average price. You can't see any of that information. It's like so hard to find stuff. It's like, who put this platform together? Certainly not a trader. All right, so, you know, I have to say Coinbase is organized at least, and you can get your job done. BitMEX isn't bad either, okay? BitMEX is more for like the futures, and they give you a lot of leverage and stuff like that, more for the active trader. I like BitMEX, you know, as far as an exchange goes, and they are more of a trader-friendly setup. Although many of these platforms have all these bells and whistles on them that are just unnecessary. But if you have to understand from the exchange perspective or the broker perspective, you want to stimulate trades because that's how they make a lot of their money, right? Whether they're on the other side of the trade or they're making the spread or whatever it is, or they're charging their commission, their fee, whatever it is, they want action. So they create all this unnecessary stuff to stimulate action. So wow, no wonder why people are so impatient. Look at the stuff that they're exposed to. Most of it is unnecessary. But to be honest, if they created a platform where all that stimulating stuff wasn't there, they'd probably have a lot less trades and they'd be making a lot less money. All right, like a casino. Imagine you went to a casino and the slot machines were just like these computers with no sounds, no graphics, nothing, no bells, nothing, not even the arm on the side. It's just a machine, and you put some money inside the machine, and you hope something comes out of the machine. No one would play slot machines, right? But instead, you go there, and it's like a whole experience, the slot machines, right? Okay, think about that. A lot of these trading platforms, I think, are developed on the similar premise. All right, so good question. Let me see what else we have here. Let me see. So, yeah, so those are the ones. Monica. Okay, sure, no problem. Oh, wow, Switzerland. Wow, that's cool. From 2017. Wow, I have some people still following me from that long. That's really nice. Thank you, Monica. I appreciate that. Okay, but I'm suspicious about Binance. Right, so I just answered the Binance question. Okay. Yeah, I mean, again, I don't know how but when you don't know any better and you're like a new trader, all right, and you want to see stuff moving, you want to see action because you think you're getting information, you think you're in control, but most of that information, like I said, is useless. It provides no value at all when it comes to timing, especially swing trades or shorter term timing. All that information is useless. Here's another thing to consider. All the stuff on a platform, okay, whether it's a charting platform, a trading platform, whatever it is, okay, they appeal to the function of human nature that says more is better, okay, and when it comes to this game, less is more. So, you may get like a charting platform, whatever, and there's 100,000 oscillators on there and all this news, and there's even a feed to the CNBC and all this other nonsense, right? If any of that actually gave real value, it would not be on the platform, especially for free. Okay, so something to keep in mind there. All right, let me see what else we got here before I go off on these rants. You get me all political now. How do you see AMD and NVDA? Okay, let's take a look. AMD. Let's get some people asking about stocks here. Okay, so AMD is a market stock, right? It's a semiconductor leader. We all know AMD, and it's going to be very sensitive to the Nasdaq. Now, these semiconductors, it's going to be sensitive to the whole sector. As we know, a week and a half ago, 2 weeks ago, like these semiconductors, a lot of them, they had great reports, great earnings reports, and the market shrugged them off. Right? So we saw the NASDAQ trying to push its highs, and now we see the NASDAQ is acting weak, right? You're going to see that same reflection on all of these semiconductor stocks. So as far as AMD, I can understand why, you may look at this and say, hey, this looks like a potential swing trade, right? I see a double bottom, right? And a pin bar. And you know what? In another context, yes, I would agree. But because it's a market stock and it's sensitive to the NASDAQ, I'm bearish on the NASDAQ. So I'm anticipating that these supports will break. All right, so that's something where context really comes in to be very helpful. I don't trust these levels at all because this thing breaks, right? You take out 74 or whatever, you start taking that out, that means the NASDAQ is broken, right? And that also means the S&P is probably broken too. And this thing has plenty of room to go lower, right? So you have another support around, what's this level here? Right, that 74 is a pretty key support. You take that out, you're looking at like what, the 60s? Maybe even lower, right? There's an old AMD trade we had at like 90. Good thing I don't even know if that one activated. We had a couple of AMD trades a few months ago. I never took it off the chart. But your next support after that 74 is cleared, you're looking at the 60, like maybe mid 60s, and then you're looking at like this 50 area, okay, which dates back to this old consolidation, 59, 59, 60, around there. And I know some people say, oh, I'd love to buy AMD at 59 or 60. Right, but when it's really ugly looking and the market is getting hammered, that's when, it gets to 60. Oh, I don't know, I probably should wait. Right, that's usually the thought process. So those are the levels. We'll see if the market can get there over the next 3 to 6 months. Now, are these garbage companies? No, AMD is not a garbage company, not at all. But why can a market go lower? Why can a stock go lower if it's a good company? Well, it's because markets are irrational. All right. Let's talk about irrational for a moment, since you brought that up. And I'm going to take a look at Nvidia. Well, actually, let me do Nvidia first, and I'm going to bring up another one that I've been keeping an eye on. So Nvidia, right, a leader in the semiconductor space. I mean, this thing again had great report. And it's been acting like this, right? Somewhat weaker. So I would stay away from these right now until the market finds a support, until the NASDAQ finds a support. Otherwise, these things are just going to keep breaking their supports. 560 is the low on NVIDIA. I would stay away from these right now. It doesn't mean you won't get a small pop. You may get a pop over, going into tomorrow's NFP again. If there's a strong market tomorrow, maybe you get a pop. But I don't think these pops are, I don't think we're going to see that nice sustainable leg higher, going all the way through here. I don't think we see that until the market finds its bottom. And the market is still far from a bottom, right? Look at the NASDAQ. Oh, wow, look at that close today. This thing closed? NASDAQ closed pretty strong. Okay, fine. So my point is this. You're going to see that reflected in a bunch of stocks. But that does not take away the bearish range expansion we had the other day, especially going into NFP tomorrow. So if we take out these supports, right, on the NASDAQ, you're going to see NVIDIA and AMD and all of them, they're going to take out their supports too. The NASDAQ needs to find its bottom. Right now, a potential bottom is 13,200. We're at 13,600. So we still have a little room to fool around there, right? And I'm going to wait for that. I'm not going to buy into this. Anyway, so thank you for bringing that one up. I use, especially with semiconductors like that, I use the market as the gauge. Then I look at the stock. Okay, Irina bought EOS in 2018 at 1160. Oh man, nice. Wow. Okay. Yeah, a lot of people got caught in that stuff. Bybit is the best platform, I think. Okay, Michelle, thanks for mentioning that. I'm not familiar with Bybit. I've never used it, but I can tell you one thing. I judge platforms on their ease of use, and the simpler they are, the better. Okay, if they're crazy like Binance, then then I'm not a big fan. Anyway, so thanks for mentioning that. That's good to know. Travel, I agree with you on Binance, but the platform with BitMEX is that you can't sell to fiat. Okay, well, right. That's the thing. So BitMEX is more of like a trading platform, especially since they give you all kinds of leverage to use and stuff like that, and they have their their perpetual swaps, right? Their futures contracts. So I mean that's what BitMEX is really more. It's more for active trading rather than investing, right, or holding on to something. So that's a good point that you bring up. Thanks for mentioning that. HS, hey, nice to see you, HS. Michelle, what do you think about dollar cost averaging with Bitcoin? Okay, so it's funny. Coinbase, and this is what I wanted to bring up. Coinbase actually wrote an article. They actually published an article about dollar cost averaging and basically saying it's the right thing to do. I was a little surprised to see Coinbase put something like that, but I guess, hey, what do they know? They don't care, right? They just want to make their fees. Here's the Coinbase stock, by the way, COIN. Now, I mentioned yesterday in our chat, I said, hey, this thing was around 276, and I said, hey, this is a good place to pick up some for inventory, right? 276. But what I said was, the risk, and you have to make sure you size properly, is the next inflection point. If it clears 276, which it did within minutes, you're looking at 250. Today's low is 250, all right? So here's the thing. Speaking of dollar cost averaging, do you dollar cost average to something like this? We all know, I mean, if you watch, there's tons of videos available about Coinbase and their balance sheet, and their earnings are coming up soon and this and that. They make a lot of money, all right? They make a lot of money, so maybe the stock wasn't worth what it was on IPO day, right? You never buy a stock on IPO day. Usually this is why you wait a few weeks. But the point is this. Is Coinbase a garbage stock? I don't think so, right? I mean, not with the amount of money that they're making in general, right? They do pretty well. So this thing is probably going to start to get irrational. So talk about dollar cost averaging, an ugly chart. This chart is ugly. There's no buy signal. There's no support. All you have is that 250 inflection point. But hey, what's wrong with buying a couple of shares, right? What if this thing goes to 225, maybe even 200, right? That's how you want to dollar cost average into something like that, but you do it small, okay? One share at a time if you have to. So like a day like today, this thing is minus 15 points today. If you only had a couple of shares, you're like, all right, who cares, right? But you're averaging in at a good price. All right, so just something to keep in mind for inventory, because I think Coinbase is a solid company. They're the leader in the space. I mean, who's better than Coinbase as far as exchanges go, and who's more honest? And now Coinbase is a public stock, which means they're regulated by the SEC. I mean, come on. So I'm thinking of it as like the Google of the exchange space. Anyway, something to keep in mind. Even though there's no technical reason to buy this thing. When you're investing in something or you're thinking of a position trade, you don't always need a technical reason. You protect yourself with size. So let me answer your question about Bitcoin. So Michelle asks about Bitcoin here. For the long run, I think dollar cost averaging is a good strategy for a quality asset, right? Bitcoin, I think we can agree, is a quality asset. We all know why, right? We don't have to talk about the fundamentals. It is the leader in the entire space, right? This is not some garbage coin. So dollar cost averaging would make sense, but just you have to be careful. You have to gauge your risk depending on the prices or the levels. Like, so for example, in such a location here, right, we are near highs. We're not near lows. These are not attractive lows. There are no attractive lows nearby. Your first attractive low is 48K. We're nowhere near it. So what does that mean in terms of dollar cost averaging? That means if you're going to take small bites, if you're going to take bites, you're going to build inventory, you do as small as possible at such levels. The higher it goes, the smaller you want to be, okay? Because it's going to pull back at some point. And when there's the real pullback, when these markets get rational, they get out of favor, right? Like the cannabis sector. Andrew mentioned the cannabis sector earlier today about maybe starting to buy into that. They're hated. They hate those stocks. I hate those stocks too. But the thing is, no one's talking about the cannabis sector. Meanwhile, there are some good cannabis stocks, right, that you can pick up real cheap right now. So when Bitcoin gets into that situation, that's when you really want to start focusing on putting on more. But the point is, you can dollar cost average at any price. The thing is, you do it smaller when you're near resistances, and you do it larger relative to your account or whatever you're investing at lower prices. So again, those inflection points, 50K, 48K, 40K, right? Or anything lower, 38K. What's this level over here? This is 20K, right? Those would be ideal inflection points if it can get that low. I mean, it's hard to believe that it can happen, but anything is possible. The point is, the market will find a low part of the range, and that's really when you want to put on more of your dollar cost averaging. That's one thing. The other thing is you don't do it infinitely. You have a set allocation in mind. So let's say you're investing $5,000 or $10,000 or $1,000. Once you reach that investment amount, okay, after you've done all your averaging at all the prices that you've been interested in, then you stop. Okay, just like with gold. I dollar cost averaged into WPM, wheat and precious metals, and wheat and precious metals kept going lower, kept going a little lower. But my allocation was filled. I'm not going to keep buying more. I don't care if it keeps going lower. You have to protect yourself in case there's an unexpected break, right? And it goes a lot lower than you thought. Because if you get too big too fast, you get margined out, right? You run into problems. So anyway, thanks for asking about that. I know that was a very long answer, but thanks for asking. Okay. Michelle, okay. So maybe you can answer. How do you guys exchange larger amounts of USD to fiat? Seems like Binance doesn't do it. Larger amounts? Well, I don't know. Coinbase doesn't seem to have a problem with that. I mean, they have some limitations depending on I guess whether you're a verified customer or not. But I don't know. It's not really I've never done that through Binance, so I don't know. I can't really answer that question. But I would look into Coinbase more for something like that. I came to a similar conclusion. Okay, cool, Monica, cool. All right. So I think I've answered everyone's questions. How am I doing with time? All right, I got a couple more minutes, and then I'm going to wrap this up. So let's see. Any other questions before I turn this off? This is some great questions. I really like, the questions about like the exchanges and dollar cost averaging and stuff like that, because it's very important. And a lot of people can learn little bits and pieces. Because remember, in this game, it takes a long time to really get a sense of, how to put all the variables together based on your own personal situation, right? So if you're looking to invest, or if you're looking to day trade, or you're looking to swing trade, or you're looking to do all three, all of that has to be organized in a certain way, right? Everything has to be categorized, and over time, you'll figure that out. But meanwhile, you pick up bits and pieces here and there, right? And you learn from watching different videos and taking training courses and this and that. And over time, it starts to come together. But it takes time, I have to tell you. And if you're smart about it, you find good educators and you invest rather than trying to do trial and error. Because I took the trial and error route, and let me tell you, it sucked, all right? And it took me a long time, like it took me like 10 years just to get like the basics, which I could have learned if I had just paid someone, but I was too cheap. Anyway, so XVG. Okay, so how long did it take you? So actually, that's a good question. 10 years. It took me 10 years just to understand the basics of understanding how markets work, like on a basic level. And then it took me a couple more years after that when I was working at S&B Capital, and that's where I met some people that really taught me how to develop consistency in my trading. Because look, you can make money here and there, and you can make money for some short period of time because something may work, and then something stops working, and then you don't make any money anymore, and you don't know why, right? But it's because you may be using something that the market is just being forgiving to at the moment, like a lot of people are doing with these altcoins, okay? It's temporary. So you need to be able to recognize the market from a perspective, a true order flow perspective, and that's where the value comes in. So to answer your question, it probably took me about 12 years, maybe a little bit more than 12 years to get to that point. Yeah, it sucked, okay? And I can tell you it sucked and it was miserable. So people think trading is glamorous. It's not. And so do yourself a favor. You want to learn stuff, if you can afford educators or whatever, these days at least you can find people's reputations a lot easier, and you can read reviews on people and this and that. Back in my day, you didn't have that stuff. You had to just hope that this guy wasn't, robbing you. And anyway, so good question. Let me take a look at XVG. All right, here's the thing, and then I'm going to wrap this up. XVG BTC. I don't like looking at BTC crosses, right? Because Bitcoin is not a stable currency. So while this looks nice, this looks good and everything, the price action here is going to be a lot more erratic and a lot more unreliable, right? These levels will look good after the fact, but they're unreliable because if one side of the equation moves faster than the other, even if they're going in the same direction, you're going to get an erratic chart, okay? Like this price action right here, okay? Like all that stuff. I don't like those type of charts. So to get a better idea, take a look at XVG, against something stable. USDT, all right? It looks very similar anyway. It looks similar, but you can at least get more reliability from these levels because USDT is stable. So here's the thing, for something like this, it looks like it's in a similar position to like Link and all them. I wouldn't touch this now, especially with this type of candle developing. If you're interested in supports, you're looking at 4.5 cents and then slightly lower, which is around 3.5 cents. Those are your attractive levels. Otherwise, you're just playing you're just gambling up in these areas here. All right, it might go higher, but the chances of this thing turning, especially if Ethereum and all them pull back, which they haven't even begun to do yet. All right, and these things are all hesitating. They're all following either it's Ethereum or Bitcoin. So thanks for asking about that. Okay, Irina, thanks. I found you and got well ahead of the game. Oh, cool. I appreciate that. Thanks. How about talking about investing capital gains taxes? Talking about investing capital gains taxes versus trading. Oh, well, you know what? I look at it this way. If you're paying taxes on your trading, then you're doing something right. All right, it's actually, it should be like it's. I know it sounds funny, but it means you're making money if you have to pay taxes. So it's a good thing. I don't really get wrapped up in the tax thing. It's like I owe taxes, fine. I try to minimize them, whatever, whatever I could do within the bounds of the law, and I pay taxes, whatever. I don't get all wrapped up in that because you know why? It can interfere with your decision making, especially because you'll say, "Oh, I don't want to sell this. It's going to be a tax event, a taxable event, and this and that." But the market may be saying sell, and you're like, "But I don't want to sell it because the IRS is going to." I listen to the market. If it's going to be a taxable event, hey, it's a taxable event, whatever. I mean that's the way I deal with that. I try to keep things as simple as possible because that stuff can really become very confusing. And like I said, interfere with your decision making and risk taking. That's all I'm interested in is risk taking. So that's good that you mentioned that. Andrew would also probably be another good one to talk to about when it comes to taxes and dealing with investing and taxes. Since he's more of the longer term investor, I'm much more short term oriented. What does arbitrage work well on? Well, okay, arbitrage. All right, so good question, Gabriel. Arbitrage. Arbitrage is hard to do as a retail trader. It's usually more appropriate for market making companies or firms that are positioned to do such a thing because they can use instruments that maybe we don't have access to, or they have a level of margin and stuff or resources that we don't have access to. And they're usually looking to make money on some kind of spread, right? So arbitrage, I don't really have an answer as far as what instruments. Usually you want instruments that have some type of distinct relationship, right? So for example, if you want to talk about, Bitcoin micro futures, which just came out, and Bitcoin itself, right? There's going to be some kind of fixed relationship between the two. So, either that relationship, that the spread between the two prices is either going to get wider or it's going to shrink, it's going to contract, right? And that's usually what arbitrageurs, that's usually what they're looking for, right? You can play that game with options, you can play that game with S&Ps versus a basket of stocks, you can play that game with oil. I mean, there's all these different ways to play that game, but it gets complicated. And so that people like to stay away from, those are people that don't like to trade the market in a directional way. So usually options are very popular for that type of stuff. Option combinations like iron condors or calendar spreads, or basically like that's the kind of stuff you're getting into with that. I really don't specialize in that area. So I really can't give you specific instruments, but I can tell you that it's usually a relationship that they're trying to exploit. So that's a good topic for Google. You should Google that. Anyway, thanks for asking. Do you ever use, here's a good question. All right, I'm going to answer this question and then I'm going to wrap this up. This is a really good question and I get this one a lot. Okay, I like the way you think. Thoughts on taxes is holding me back from trading. Okay, no problem. Yeah, like I said, in this game, you have to try to keep things as simple as possible, right? Less is more, and that means when it comes to taxes and anything else, you don't want things to get in the way of your risk evaluation, because that's really all that matters, right? If you lose all your money, hey, you're not going to have any taxes to pay anyway. So, all right. So let me answer this question here about the RSI and the MACD. I try to use them on daily trades, but okay. Well, they're always going to give you bad signals, okay? Most of the time, a lot of the time. You have to understand what those are. Those are oscillators. They're based on some kind of formula, right? Some kind of mathematical formula that smooths out price over time. So for a smaller time frame, like a 1 minute chart or a 5 minute chart, they make a little more sense because you want to smooth out price action sometimes, because price action can be very noisy on a 1 minute or a 5 minute chart or something like that, smaller time frame. But when it comes to a daily chart, there's a lot less noise on a daily chart. Now these tools like RSI, they were invented in the 1970s and the 1980s, and they were made for that purpose, for trend following, all right? Remember, there was a lot less information at that time. So they've carried over to like where we are today, and a lot of people use them because they think that they're getting some kind of value. Keep something in mind. All of those oscillators, all of them, I don't care what kind of fancy name they have, they all do a similar thing, just in different ways. They smooth out price over some period of time, which means one thing. I am looking at old information, right? It draws a little line on the bottom region of my chart and this and that, and it's showing me something from some number of periods ago, all right? Whether it's 14 periods, 20 periods, 50 periods, it's taking all that information, putting it through the formula, and then giving me some kind of point on the bottom of my chart, right, to help me smooth out price. It's good for trends. It can be somewhat more helpful there, but what happens when the market gets out of a trend? And we see that all the time, right? A market doesn't go from bullish to bearish trend. It can consolidate for a while before it changes trend. That's when the oscillators will throw you off, because now they're all mixed up, right? So you need to keep that in mind. Our job as a market timer is not to look backward, it's to look forward, right? We have to anticipate price action, not look in the rearview mirror. That is the problem with oscillators and why I don't use any. Now, I spent a good probably 5 years working with one particular oscillator because I was told that it works, okay? And I knew a lot less back then, but you know, I stuck with this oscillator and I could never make money. I'd make some here and there, but I'd always give it back and I could just never make money. And this oscillator sucks. And I always used to argue, you know, no, this guy's an expert. It works. He makes money. It works. Right. They work if you put them in the right context. But alone, in and of themselves, they provide no advantage. There is no value. As many of these gurus will tell you, oh, I use an RSI and I use this and I use that. And the RSI says this. It's all nonsense. It's all basically, the information that the RSI is telling you, you can get from the candle anyway, right? So you're looking at the same information over and over again, and it's not providing any value. If these oscillators actually delivered some kind of true advantage, they would not be on our trading platforms. They would be charging you money for them. They'd be, oh, the RSI, it's going to cost you $100 a month or $500 a month because you're paying for the advantage. There is no advantage, right? So, you know, are they bad? No. You have, first of all, to use an oscillator, you really, really need to understand how that oscillator is derived. What exactly is it measuring? Okay, because then you need to be able to take that information and put it into the context of the environment, right? Context, meaning price action, price levels, trend, and then that oscillator might give you some more meaning, but all it's doing, again, is smoothing price. I don't use them, right? A trend line can give you more value than an RSI. So, you know, think about that. Anyway, thanks for that question. Whenever people ask me about those type of things, you know, I go on like a 30-minute rant because I'm very passionate about not using oscillators, because I was misled for so long. That's why I wasted a lot of time. All right, so you know, and I will, if I have to look at something again to smooth price, you know, I've used like things like the CCI. That's the oscillator that I'm very familiar with. But again, that will only be like on a 1-minute chart or a 5-minute chart for that type of stuff. No way would I use that for a swing trade or a daily chart. All right, okay, Anisoria. Can you have a look at, okay, I looked at Cardano, AAVE, USD. Okay, no, you know, so hold on here. Let me just read the question. More decently than BTC. Okay, it looks like moving within the range to me. All right, so here's the thing. I got to wrap this up now. I looked at ADA. If you just go back in the stream, probably about midway or maybe around there, you can see ADA. Let me just take a look at AVE real quick. AAVE. Let's take a look. All right, well, I figured this thing is it's doing the range, the failed break, right? You have the breakout of the range, similar to a lot of these coins, and it's giving it back. It's going back inside the range, right? So that's a failed breakout. I would not go near this thing seeing something like that. If you bought it on the breakout and you get these red candles like this, that's really, in my opinion, that's where you take the loss, you make the adjustment, you get out, you know, small profit, small loss, and wait for better prices, because you possibly can test the middle of the range or the low of the range. Many coins are in this situation right now. The failed breakout idea, right? The failed breakout potential. So I would not get caught up in that mess looking like that, especially the way Bitcoin looks and especially the way Ethereum looks right now. They're likely to pull back. So we have to see if they pull back. Keep in mind, tomorrow's NFP, if the stock market gets tossed around all over the place, these coins may feel it. I don't know. I mean, the relationship is there when it's there. When it's not there, it's not there. It's random. So we have to see how that goes. Usually NFP doesn't have a major effect on these coins, but hey, you never know. All right, so anyway, that's your quick answer. All right, so I'm going to wrap it up there. I want to thank you all for your great questions and spending this time with me here today on Thursday afternoon. Says, I'm still a newbie and still feeling like gambling with too much money. Anyway, okay, cool, XX. Oh, thanks, Paul. Yeah, thanks for mentioning where ADA is on the stream. Yeah, again, when you're new, here's the thing I tell new people. As much as you can, stop listening to people. Don't even listen to me. I mean, I speak a lot of sense and I speak a lot of reality, but what you need to do is you need to separate yourself from the information that the rest of the world is consuming. Okay, that means no news, no gurus, no articles, none of that, no YouTube videos, right? And just focus on your chart, a daily chart. Don't use smaller time frames. Look at a daily chart and just look for simple information. Identify levels, identify trends, and then say, hey, based on that trend, this would be a good level if it could ever get there. And now you have yourself a little plan. That's really like what you should do in the beginning. Another thing that you should do, all right, speaking of gambling, is if you're not familiar with the game of poker, you should learn how to play poker, Texas Hold'em, not to gamble, but to learn how to learn how to take risks, because that's what poker really is all about. Professional poker, there's something called a professional poker player. How does someone become a professional at playing cards? Well, because they're managing risk and they're making decisions in the face of very incomplete information. That's why I like the game of poker so much, because it's very similar to the routine that you have to go through when it's making a decision for a trade. Okay, now of course the game of poker is a lot different than the market, but excuse me, my voice is running out. The decision-making structure is similar. And I'm surprised a lot more people don't talk about that. So anyway, those are the two things I would tell you. Focus more on charts, learn technical patterns, and use things that forecast price, like trend lines. Learn things like Elliott wave, because they forecast price. Okay, they're not looking backwards. And use a game like poker to help you learn how to manage risk and make decisions in the face of incomplete information. They will really sharpen your skills. Okay, so cool. Shubham is asking a question. Okay, so IV, Shubham, that's a good question. You can get some information out of that because that comes from options, right? So option market makers the actions that they take will be reflected in that number. So what you can get from something like that is called an expected range. It gets complicated, but what that can help you do is actually help you measure risk. All right, it's not going to really help you with direction because that's not really what it's there for. It's there to help you understand how wide a fluctuation can be. So that comes in that's very useful when you're trying to set a stop, for example, because if your expected range, for example, on something like Bitcoin, if you can get the implied volatility and you get the expected range on a certain number of days out, let's say 50 days, 30 days, and you say, oh, it's a 3,000 point range, higher or lower. Okay, so it's 1,500 higher or 1,500 lower. That's going to give you a good sense of what its first standard deviation is. I don't want to get into all the math stuff. It might confuse people. But to answer your question, yes, that is information that can provide value. So thanks for asking about that. If you want to learn more about it, just Google it. Lots of information out there about that stuff. Okay, okay, cool. All right, so I'm going to wrap it up now because if I keep talking, obviously I like to talk. So if I keep talking, I'm just going to talk all day. And I know in some of these places, like a Shubham is in India, it's got to be like, 3 a.m. over there? This poor guy needs to go to sleep. In some of these other places, it's got to be like midnight and whatever. So, I got to wrap this up. It's almost 5 o'clock here, Eastern time in the northern New Jersey area with my New Jersey accent. So anyway, again, I want to thank you all for spending your time with me here today. I hope you found this useful. Again, enjoy the rest of your day, the rest of your evening, wherever you are in the world. And Join me next time. Again, I stream on Mondays and on Thursdays. On Mondays, I'm on TradingView as well, so I have millions of questions. So here's a good time where you can get me in a more intimate setting, and I could spend more time with your questions, even though I spent the same amount of time here today as I spend with TradingView, because I like to talk. Anyway, all right, everyone. See, 2 a.m. in India. You got to get some sleep, man. All right, cool. No, I appreciate it. Thank you. Shubham is very committed. All right, so thank you. Thank you. I appreciate that. Okay, cool. Thank you all. All right, so enjoy the rest of your day, and thank you very much for watching.